Having said that, we move on to the next panel discussion. And this next panel discussion is actually very interesting and very exciting as well. I've been really personally looking forward to it because, as you know, that the industry in many ways has actually consolidated a lot. There have been a lot of acquisitions. There have been a lot of mergers as well. And that is a process which I feel that is going to be a little bit more rampant. Having said that, the next panel discussion is going to be the thirst for growth, which is exploring investments, mergers, and acquisitions. So, can I please request all the panelists to come up on stage? The session is going to be moderated by Mr. Arvind Kaul, who's the Deputy Managing Director of Alcobrew Distilleries. Along with him, there will be Nita Kapoor as well, who's the CEO of ISWAI. And can I also request Mr. Sanjay Jain to also share?
Good afternoon and good evening. So I think there could not have been more apt slogan for this event, keeping in view the fact that India has come a long way from a fragile 5 economy to the top 5 economies. And we are looking forward to going to the third largest economy in next 3 years' time with just overhauling 7 trillion economy sometimes in 2030. So we are looking forward. There are higher, aims for Government of India. They are looking forward to being a developed economy by 2047. So keeping in view the fact that let us open this session by looking at the economy, how it is panning out.
Grown or is seeking to grow along with the industrial growth. As India becomes more prosperous, more urbanized, as Indians travel abroad, so there is definitely a upgradation of taste and lifestyle, and therefore liquor consumption, you are having new people getting recruited at a fast pace. So the industry is definitely growing much in line with the trend of India becoming developed. As aspiration rise, there's this aspirational India also, which one needs to focus on. And it's linked to the premiumization trend. So people want to consume better products, and that is what is coming out in terms of, wanting to have more branded products and moving up the value chain, price point, etc. So we are seeing this across categories. It's not only, whiskey that, of course, India has been known for, primarily the thing, but there has been a lot of innovation, in terms of other spirits also. There's a lot of gins in the market, which are high price points, and they're finding new takers. Wine consumption in the premium space is growing. Sula, Fratelli, you name it. So overall, the industry is very well placed and growing very well, as with the economy growing. Yeah.
So while we see that economy is growing and it's going up the chain, we are also looking to the fact that, in fact, the imports and exports gap is also, it's shortening. And there is this current account deficit is going down. So how do you see our industry doing as far as the overall economy is concerned?
So I know for sure that the Alcobev industry is mirroring the country's growth. One of the reports that we've done and just distributed to the relevant stakeholders is this here. Currently, the industry is valued at about 50 to 53 billion. In the next 5 years, this industry is going to grow up to 64 billion US dollars. Very few sectors in this country have strong organic growth, and the Alcobev sector is a sector that has a very strong organic growth. We're talking about a 6% growth on a market size of 367 million cases. India will continue to dominate and be the browns market. It is the second largest as far as the brown spirits is concerned. Whiskey, followed by rum, followed by brandy. I'm sorry, but vodka and gin, those will those companies will need to broaden their portfolio. 5 key indicators of the country that will really help India is essentially, our sector is essentially urbanization. New entrants, 30 million new entrants coming into this category. Tell me which category do you see 30 million new entrants? Not even the FMCG, which possibly is the largest sector in this country. Yeah. Third is infrastructure. The more the roads, the more the metros, the more the technology, the more the digitization, you're going to see the sector grow. Fourth, whether my non-FTA lovers and FTA lovers, I saw that debate, whether they like it or not, preference for international products with global aspirations, and as Indian travel and as India becomes a tourism hub, it's here to stay. Accept the reality and work with the reality. Do not fight the reality, and grow with the reality. So having said that, and of course, really, education. And last but not the least, the entry of women consumers. These are the top 7 to 8 trends that coincide with the growth rate of the country and the economy of the country that will see this industry continue to boom, albeit in the pattern that I've just explained.
Yeah, the topic further is that the thirst for growth, exploring investments, merger and acquisition as far as our industry is concerned. So we are looking forward, as you have rightly pointed out, that it is also contributing to the GDP of India. We are contributing nearly 2% of the total GDP. And how does our industry grow? We don't see any big names as far as Indian names are concerned. We don't see any big Indian names in this type of trade and industry. So what exactly? I mean, we can have organic growth, we can have inorganic growth. And how do the entities who are currently in India, whether domestic or MNCs, so how do we look at the growth which an entity can bring into organically or inorganically? What are the avenues available to the industries as of today?
Thanks. So I think it really starts as a topic. We're talking about investments and mergers and acquisitions. I think it really starts from the growth issue. This industry has seen some headline transactions in the past, and you know, I think all of us, being the industry people, would be aware of them. But I think the focus now, or the trend now that one sees, is really really you know, Indian companies. You know, a lot of these companies were volume players, were I would say till earlier largely focused on the commodity side of the market. You know, they are wanting to up the ante, and we have seen a lot of innovation and also investment in new brand development, and also alliances, you know, between bigger companies and smaller startups, or I would say smaller people who've developed, you know, good brand, etc., but can't scale up, etc. So what we're seeing today is alliances. You know, alliances is really which is happening, and where you know, we've seen some headline stuff happening, even with you know, Diageo doing with the Hapusa spirits, and then you know, there are various types of things which are happening. As far as within the organization, also I would say it's a little bit of a hybrid approach. The volume business which runs the P&L or provides the P&L of a company, that continues. But separate divisions have been created which are doing a lot of NPD, which is new product development, and also, you know, wanting to come into prestige plus segment. In fact, one of the metrics now which everybody, you know, touts about is what is the share of prestige and above segment in their entire turnover. So and the motivation for that is not only the desire for growth, it is also somewhere people want to de-risk from the you know, ups and downs of the commodity market, and also, you know, the various state policies, etc. So Indian companies, I would say, have already demonstrated some results, in terms of good quality products, which have come out. I mean, we all know, Indri, became a sensational success, or at least got a lot of press coverage. Uh, Amrut has done it earlier. Paul John had done earlier. Radico has done a slate of prestige plus or premium brands. So I think this is going to catch on more and more. At the same time, on the on the smaller companies, the startup companies, you've had Stranger and Sons, and then Divans, and then this Hapusa, and there's a lot of these companies have come up. Uh, they have had their challenges, but I would say that the overall level of discourse has gone up. This industry is now talking about experiences. It is talking about hospitality. So there are envelopes being pushed all across out here. So really, I think there's ample growth happening, both in terms of companies or businesses' own efforts as well as alliances. Uh, Headline M&A stuff, it's still few and far between, I would say here. Rather, the focus now is from some companies is to go to stock markets and going for listing, and that has been an increasing trend. I would say about 15 years, 20 years back, there used to be McDowell and then Kingfisher, United Breweries and United Spirits. But now we've got Radico, we've got Piccadilly, we've got Sula, So this avenue allows companies to raise capital from public markets, which at a valuation which you cannot imagine in private domain. I mean, branded companies are getting quoted at 40 times to maybe 80 times earnings, which is like nobody can justify in terms of private transactions. So I think we are going to have this phenomena of public markets and then raising capital, increasing capital raising capability. And then as and when opportunity for consolidation happens, then I think consolidations may happen. But I do not see that too much of activity. I do see alliances.
Yeah, Sanjay, while you were talking about the premiumization and Nita was talking about the urbanization, I think our industry is contributing quite a bit as far as the overall economy is concerned. And since, especially after COVID, when the fine dining this thing started happening in the country, this trend of having liquors inside restaurants and hotels has increased. So I think, our industry is also trying to develop in its own way. Coming to the topic of mergers, so what exactly are going to be the objectives of a merger? How do we put forward as an objective, and how do we identify a company who is going to be taken over? So our target company. So if I put it to you, Nita, what do you say about that?
So I'm going to kind of build on what Sanjay said. If I look at the industry structure, 65 to 70% of the market share is in the hands of the top 15 companies, which means the industry is polarized in the hands of 15, max 20 companies. The rest of the 30% of the industry is terribly fragmented. And this fragmentation itself is also a challenge as far as investments is concerned. So Sanjay is right in pointing out that headline M&As are not going to take place. Possibly alliances could take place. Possibly acquisition of startups will take place because startups are almost operating as outsourced divisions of organizations testing out innovation. Coming to your specific question in terms of what do you look for a merger and in an acquisition. In a merger, the criteria is I am merging with another company to be able to create a third, and that third will offer me far greater value than what the two of us individually could do. Now, is that value going to be higher or lower than my organic value is something that the leadership table decides. But that is the primary reason why I go for mergers. Second, I also go for a merger because, I want to have a competitive block. So those those all of us who have studied Michael Porter and lived by Michael Porter, competency frameworks, then I also use it as a strategic intervention to block competition. That is also the time when I look at mergers, right? So these are critical decisions, but it will always be driven by organic versus the additional growth that I will get. In terms of an acquisition, it is going to be for a couple of reasons. Again, driven by growth, it can be portfolio. How do I expand my portfolio? Number one. Number two, how do I address markets which are not addressable to me? Which means there are some states I'm weak, some states I am strong, and how do I bring these values together? Third is, who's got a better innovation that I can kind of, grab? Or who's got a better competency? Whether it is a leadership talent, or whether it is R&D, or whether it is going to be design, whether it is the culture of the organization, whether it is the excellence of sales and distribution, or whether it's the excellence of manufacturing practices, then I'm going to go out and acquire them. So the driving objectives may be growth, but the approach to both these are very distinct. We often use them loosely, but that's not the case.
A small follow-up question is, you're talking about alliances. So how do you look at startups as far as alliances are concerned to the bigger companies?
Right. So, everybody keeps naming a few startups, but maybe I'm going to be a devil's advocate. Whilst I have a tremendous respect for startups and really saluting them to enter into the category like Alcobev, which I believe is unnecessarily over-regulated. So where do I look at startups? The challenge is you can't scale. If you're going to end up looking at a state and a couple of handful of cities, and that's exactly what's happening to the wine sector. Somebody kept talking about wines, but wines is a rounding off error to the total industry of spirits, right? We know our numbers. So, let's get a little real here. So startups are essentially, to me, pilots. Pilots to kind of see consumer acceptance, pilots to see in terms of distribution ironing out, pilots to see sustainability of product, consistency of product. And once I achieve that, then my valuation is haywire. What I ask for my valuation to be able to be acquired is something which is really not, that's debatable. And that is one of the biggest challenges, not also of the Alcobev startups, but also of the non-Alcobev sector, where startup valuation is going through the roof. And compliance and governance is another story. So it's not a joyride, but good luck to the few companies, the handful of companies that have got into it. Whereas I will draw your attention, really look at your SMEs very closely. Because the SMEs in this sector have far more intangible and strong assets than really the startups.
That's great. See, Nita was talking about the valuations. If I ask this question to you, what are the methods of valuations? They say market approach, or it can be income approach, or it can be assets approach. If you could just give a small brief about what type of approaches are usually employed as on today in the current economic scenario.
So I think this is always the question which lurks in the mind of everybody, So there are two factors. I would talk generally about finance, which is growth and profits, So whenever we broach a subject of valuations, we have to answer these two questions, So what growth does is that it provides over a period of time better absorption of fixed overheads, which improves your profitability ratios. Because growth, does provide you larger revenues and therefore more absolute amount of gross profit, and therefore you can absorb that. So growth is very important. Anything that is not growing is dead money. We call it in our industry. Uh, Profitability is, again, as far as Alcobev industry is concerned, we should probably separate the brands business and the manufacturing business, because there is somewhere division of labor which is evolving in this industry. Uh, you know, there are players who are very happy to become scale manufacturing partners to the big guys. And you guys can probably relate it to maybe Pepsi and Coke. Which have countrywide bottling partners. So, uh, so if you want to not get into the brand game, but are wanting to develop as a manufacturer or a quality manufacturer of scale, catering to the best in the industry. I mean, and there I do not today mean only MNCs, because a lot of Indian companies are also wanting to up their standards in terms of manufacturing, etc. So there, it's important that your cost structure has to be very, very efficient if you are on the manufacturing side. And but that there you can there are formulas very clearly that you can only get so much more, in terms of so much multiple, etc., of your profits, etc. The brand game is totally open. So it depends upon which stage you are or what kind of product you are. Suppose you are you've developed a product which a big company wanted to always get into, but because it is a big company, it will never be able to do the innovation in a startup sense, which a startup or a smaller company can do. So there there you can have very very flexible valuations, I would say. The entry price gives provides for financial security to the smaller company, but they can always have milestones that, listen, if we are going to grow to this level, then we get so much more multiple, etc. And that we are seeing across various players. I wouldn't like to name them, but they are in dialogue, and we are they're happy to give 50%, 51%, or 26% to the strategic partner. And then the person who was the main innovator or the founder, etc., he continues to run the company, but he benefits from the financial security, or the working capital support, etc., of a bigger company. And and also route to the market. He can also leverage that because bigger companies have a lot of strength in terms of route to the market. So after that, if he's able to demonstrate a hyper growth, then there are always agreements in place that I will get so much revenue multiple, or I'll get so much profit multiple, or something like that. So those are the kind of things which can really change the valuation multiples in case of brand business. But if just to come to your question very directly, uh, if it is a premium brand which is there today, I would say that premium brand should be earning, EBITDA margins anywhere between 15% to 20% range, I would say. Uh, and that's when, they have arrived. They have been through the whole grind of building the brand and everything. Those businesses is very commonplace, and to get like revenue multiples, I would say, and that I mean net sales, of 5 times to even 6 times, 7 times. That's very, very normal. You know, but if you are in the brand game and you still reflect the commodity end of the market, then the valuations are not that much, I would say. Having said that, there is a caveat. There is a big latent hunger in public market investors for Indian Alcobev companies, or I would say Alcobev companies. I mean, it's a bit surprising that not many alcohol companies have really, gone for listing, and some of them have good brands and still private. Because I mean, look at these valuations of these listed companies. They're talking about like 40 times earnings, 60 times earnings, 80 times earnings, and tomorrow if they wish to raise, a big pot of money, they can also raise, at those valuations. Now imagine, the kind of power that it imparts to you, that you are able to raise money at at such a cheap cost, and then still increase your business. So I would say that more companies should be looking at public markets. Yeah.
Thank you, Sanjay. See, I mean, we have seen mergers happening across all the industries. I mean, but we have seen very few mergers happening in this type of sector. If you see, there have been a few mergers in the past. Maybe you can talk about ABNB and Saab Miller, or you can talk about Diageo, and you can talk about some percentage of shares taken by Tilak Nagar. And so, are there any specific challenges this industry is facing as far as mergers and acquisitions are concerned?
So, like, I just, will reiterate, the industry structure matters. The ownership of the industry structure matters. The ownership of the industry structure is in the hands of 20 companies, right? And the rest is a fragmented and an Indian ownership. Money, family-owned businesses. We have seen in family-owned businesses, right? I worked for earlier on with family-owned businesses. It is very, very difficult to be able to drive a culture of change, a culture of acquiring, a culture of merging. Abhi bhi, they would like to be in the decision maker's shoes. So letting go will take time. And in India, that is not just in our sector, across sectors. We have 70% of our stock exchange companies as family owned businesses. Top 10 ही आपके professionally run है, right? So ये culture ASEAN region का है. So it's not going to be very easy to have mergers.
No, when we are talking about 2047 and we are looking at India being a developed country, and shouldn't a process of consolidation start? I mean, having bigger companies, and they will do justify.
So I'll tell you when that process will start, or what will trigger that process. A uniform taxation for the industry. One, simplification of regulations. The country is seen as one market and not 29 states and 5 union territories.
That's right.
Huh? Yeah. When you have such fundamental difference, alignment taking place, when you look at e-commerce, opening of channels, and you're not just playing between 85,000 outlets and the F&B, when your arena, when the paradigm will shift because of policy changes, and if that happens by 2047, inshallah, you're right. Huh? But 1947 से अभी तक नहीं हुआ है, तो I'm very, I'm not very optimistic that अभी से 247 में होगा. But our job as ISWAI is advocacy. हमने तो यही बातें करनी ही करनी है.
No, that's right. I mean, while European Union may look at a single country, we have got 29 countries within a country. As far as the laws of excise and other laws are concerned over here in India. So coming back to our main topic of growth. So, I mean, looking at mergers and acquisitions and all other things, PEs. So how do we look this industry, how is growing and running by the side of other industries?
So I think there is reason for optimism, and I would say greater optimism amongst, if you have to do relative comparison across industries, because there are many things which is working for this industry. First and foremost, I would say that there is more acceptability of alcohol consumption in this country than what it used to be maybe 20 years back. You have gatherings, you have family gatherings, you have more women drinking, and so there is generally more acceptance, social acceptance, I would say, at least you know um, I would say definitely urban crowd, there is more social acceptance. So that's huge. I mean, if you really look at it, looking at, I mean, it's always fallacious to look at Indian demographics and quote it, because India, as Arvindji was saying, that it's 29 countries within that, but still, each state also has got big populations, and there is more people moving to urban centers, etc. So there is big growth drivers happening out there. So that means more business to various players in the industry, and somewhere down the line, more profits, etc. Uh, Apart from this, there are other, you know, let's put it this is that neighboring industries touching in a collaborative way, and if you really see, Sula Fest, Sula makes almost, I would say, 25% of their profitability, when they have this hospitality, thing happening. The cellar door wines which they sell there, don't have that much taxes, and therefore that's straight money to the bottom line. You have had various companies coming out even with the niche brands, but creating experience centers are against that. Just look at the number of, I mean, Indians do go to Scotland, or and they visit these distilleries and all that. You had in Goa now, some experience centers, and I recently went to Bangalore to visit a winery, and they've just created the whole, very nice scenery and all that out there. So somewhere hospitality is also giving impetus, to Alcobev industry, and vice versa. Uh, Thirdly, I think the government is starting to look, in a more real sense. And here, I would say that over the course of last few years, there has been attempts to modernize the retail, or you know, have more modern retail stores where even women or anybody can go and buy. Of course, there have been pushbacks and all that, but I think overall trend is where the regulators are also trying to see the real potential of that. Uh, Recently, in the dry state of this country, you had Gift City, where they allowed, consumption of liquor. So those are positive things that are happening. So overall, what it means is this, that the industry is poised for growth going forward, and within that, people who are focusing on premiumization, will probably have more growth. I think that's the trend I feel.
I just want to understand. See, I mean, not much mergers happening, and maybe if you look at the representations and warranties agreements which happen between the acquirer and the acquiree, and I mean, it is is towards, I mean, the acquirer. I mean, they have got a big say in that. Uh, does it really mean, I mean, sometimes what happens is for 10 years, your income tax word is hanging on your head. So does this really discourage entities from, I mean, being acquired by the acquirer?
Yeah, so I think that's a very valid point. When we come down to actually discussing the details of a transaction, that is the time when these issues crop up, because uh, and these issues have different seriousness to, I would say, the type of acquirer also. So if it is an international company, you know, they would be, very, very wary, of, any liabilities, which are unknown, springing up tomorrow, or pollution issues or environment issues, so they are extremely sensitive because they are somewhere worried about the impact on their global, thing. I mean, we have had instances where the Indian subsidiaries of these international companies, there were problems, because the local managements, were not having the best practices here and all that. So this has happened in the past, really. But when it comes to, um, so when it comes to maybe startups, or smaller companies, which are seeking maybe to be bought over by international company, it's much easier, because their life has not been that much, So it's probably 5-year-old company and all that. Uh, they would not have been making money mostly, if they're in the brand game. So they can see, identify most of these and most of the issues which have been. And mostly these companies are doing contract manufacturing or bottling outside. So, they're just focusing on brand and all that. So I think international companies, acquiring smaller companies or taking majority stakes in smaller companies, etc., probably easier than doing a bigger one. Uh, if it is an Indian company wanting to acquire another Indian company, that sometimes is much easier, I would say, because they understand the local realities and they factor in the surprises, which may be, down the road. Sometimes what happens is that the benefits outweigh the potentialities which may come. So suppose, as ma'am was saying, that you want to enter a new state as like a expansion strategy, So, you know, you think that there is opportunity out there. So for you, you look at it that this is just an entry point for me, so I acquire this, and after that, I'm going to put so many more products of mine in that, and probably I'll, harvest much more than what I'm going to pay for it. So they then do factor in these liabilities, surprises, etc. So much easier, I would say.
While we have been talking about startups, and you don't see so many startups in this type of trade, is it because of it is quite capital intensive, and you need a lot of capital, and in case you want to start up anything in this industry?
So I don't think it's capital intensive. For the last 5 years, about 43 startups got launched in our sector, right? And they garnered an investment of about 260 million, $265 million. So capital isn't the problem. The problem really is each state, the complexity of regulations, the complexity of route to market, the cost of license. Today, if I have to, kind of sell in the next state, the licensing fee is so high that to kind of fill that license fee, I don't know what kind of sales potential numbers I have to achieve. So the cost of doing business is the biggest hurdle. So one is the cost of doing business. Second is the complexity of the regulations. Right? These two are your major barriers.
Yeah, when I said, I mean, capital intensive, I meant to say the working capital you require for doing the business. So it's huge. So
Uh, it's very important for startups or smaller companies in SME sector to be very real about what is the funding that they will require to come to a minimum level of success. Most of the times that we see is this, that a lot of these people, a lot of these people are maybe stuck by glamour, that they will have their own, whiskey brand. They do a good job of packaging it. Some of them have come from abroad. They come up you know. So they start with a lot of enthusiasm. But, you know, when the realities hit in terms of the license fees and the payment cycles and all that, you know, the working capital, the state laws and everything, that's when they start looking for money outside, and the working capital is simply not available for startups like that. And why would anybody even give it, really? It's a so risky thing, really. So I think there has to be a dose of realism which has to come in, you know, the
Right.
startups
And
also.
just one point, I think this was also said, you know, and I always look at, I read what Jason says about India a little carefully. Uh, and, uh, and because of the past experiences in different categories. In this category, more so, you must have a broader product portfolio. And only gin and only vodka and only wine is not going to survive. You have to play in the larger pool, which is the spirits pool, which is essentially 60-65% of this size. So this is a market where a wider portfolio is required and a narrower sales and distribution approach is required. A state per capita income is more important to me than a national per capita income to me. A 7-city approach is important to me, not a 29 state approach to me. So there are so many ways to slice the cake and, you know, be profitable before you are on the table to be acquired or to be merged. But sacrosanct is a wider product portfolio that essentially builds all the price points. And this is a wide, I mean, everybody in this industry knows we start from 80 rupees and we go right up to 80,000 rupees. So I'm not talking about the top end. But make sure you're participating in the belly of the market.
So, right then, I mean, can you just out of your experience, let us know some practices which should be followed as far as this merger and acquisition thing should happen, looking to the fact that I mean we are contributing quite heavily in this.
So, for the participants or the potential guys who are looking for it, I think you need to be very clear of your objective. Straight away, I think the first point is, what are you looking to do? If you are, if your motivation is to acquire or to get into a new category, you know, let that be very, very clear. Because somewhere, you know, when you are discussing transactions, there would be lots of things which will distract you from your main objective. So if your main objective is getting fulfilled, then everything else is taken care of. And similarly, I would say the one persons who wanted to sell off their businesses or maybe give a strategic stake to somebody, they also need to, you know, not pull the, you know, the rubber band so much, you know, that it does not happen at the end of the day, you know, because we must not forget that in bigger companies, a lot of professionals do the negotiations, you know, and at the end of the day, you know, they're not going to take everything on themselves, you know, they're not going to, you know, if something that they are not feeling very comfortable about, they will simply tell their owner that, listen, this is something that I'm not going to underwrite. So then, you know, it does get into a bit of a jam. So I think it's very, very clear what is the objective of what are you wanting to achieve. And then you should be flexible enough that if I get within a range of that, whatever I'm supposed to get, I should be willing to, you know, do the transaction. Yeah.
Thank you, Sanjay. Thank you, Nita, for your sharing this knowledge. So, anybody, if anybody has got any question, he can. Yes, please.
Ma'am, Neeta ma'am, this is for you. Uh, just wanted to ask you that you have been in so many industries and spent a lot of time in ISWAI as well. What are the lessons or the learnings or the like the way forward? What do you think the industry, the mistakes which people have made in the past? What are those kind of mistakes? And going forward, what needs to be aware of? You know.
So I think I said this before. I am no one here to talk about mistakes because, compared to everybody else, the experience, I am a spring chicken. But what I do find in this industry, which is very unique to this industry, it is a very fragmented industry, even in terms of voices. It is ready to shoot each other's foot and not necessarily for the growth of the industry, which I find very difficult. I've worked in other restricted categories. As an industry, we were a unified voice. So, my biggest task, even as ISWAI, and I'm sure CIBC Vinod is also working on the same, is how do you bring the industry to have a common voice? That is one. Acha, somebody talked about that the age in this industry is a boon. Now, it can be both sides of the coin. The age in the industry is also a challenge because you are locked into old traditional ideas. In हमारी parlance में कहते हैं ना हिंदी में मर गए लुट गए, वो अभी भी हम मर गए लुट गए, ये हो जाएगा वो हो जाएगा मर जाएंगे ऐसे, अरे दुनिया बदल गई है बॉस बाहर निकलो. So these are the two unique things that I find in this industry that hopefully together with CIBC and SY we may be able to drive a change. शायद ये legacy रहेगी पता नहीं. Thank you for asking.
Hi, Nita. Uh, Quick question. You said, we are poised at a 6% growth in the Alcobev industry. My question to you is with regards to beer. We are looking at about 3%, which is a growth in the beer. And I was the one who was advocating before the COVID came that, we'll, in the beer segment, in the lighter segment, we'll reach to about 7.5%, 8%. But nevertheless, times change and, the quorums have changed. India has always been a follower of the trends of the West. We've been seeing it for last, I can say, of my experience of 30 years of experience into it. So I've been seeing that we've been following the trends of the West. Now, the West has started following the lighter drinks more than the harder spirits. But unfortunately, we are still seeing our whiskey and the alcoholic beverage sector rising at much higher level. Having said that, do you see that the lighter spirits, which are more common towards the US and the European segment is in the coming trends, if we see about a particular category of seltzers, which has reached a 3.8 billion mark today on the consumption. So do you see that trend coming to India? And by when? By when do you see? One more question before. And also, if we look at on a global platform, specifically if we look at Heineken and Budweiser and InBev and stuff, and the wine segment as well, Heineken has spent almost about $1 billion to advocate on the zero-level alcoholic beverages sector. So how do you foresee that kind of trends coming to India? And second partly, if Sanjay can answer that question, how do you see the mergers happening on the lighter spirits?
So good question. So I'll give you an example. I'm not going to squabble about 6% and 7%, Gyanendra. That's okay. That's a statistics. But today, if I'm analyzing the industry, the ready-to-drink is growing faster than the wines. The ready-to-drink at a total number has overtaken wines in a far shorter time period than wines. Right? So that is an indicator to you to say that if you're ready to drink at a sub 5% alcohol content, and you can go up to 14% as per FSSAI, that is the indicator that if the hard seltzers come in, or for that matter, if the Ministry of Food and Processing is pushing for fruit bowl to be able to look at fruit-based products, then that is a bullseye. And that will become a real competitor to an alternate called beer. Because there is a distinctive need for a spirits consumer and his needs, right? So that's one part of the equation. I totally agree with you, and we'll have to watch this space. But when it comes to the international changes, I believe low ABV is your next big growth area, right? And so I tend to agree with you. Now, whether 0.0 is going to be, When will it arrive in India? I don't know. It's already arrived. But will it take off? I'm not so sure because Indians are still experimenting with their drinks. Whereas look at the market structure of Europe. Market structure of Europe is the reverse of India. Spirits, it's a whites market and a wines market, correct?
I somehow disagree there.
Fair enough, right? But I'm saying predominantly. So the pyramid has to go through a change, right? Today, we are not yet there. We are not even mature, right? So for a 0.0 to settle down will take time. But hard seltzers, RTDs is one spot, an interesting spot.
I think you've raised a very contemporary point as far as strategic alliances are concerned. I think on RTD front, there is a lot of development or new product development happening on RTD front across.
I'm sorry, I'm correcting you. I wouldn't call RTD because RTD and seltzer are both separate categories. So I wouldn't consider RTD as what we are looking at the growth on. But my point and discussion is on seltzers because I consider that RTD is a separate segment which has not seen a growth in India. And Bacardi is one of the basic examples in front of us.
Again, what at least I can see across companies, and that is a more empirical thing that I can tell you, that India may be trying to have its own set of experiments here. You know, I mean, we've seen recently the success of Bro Code, you know, which has happened. Again, it's a larger amount of alcohol in that product, etc. I'm not commenting on whether it's good or bad, but it has had good success in terms of the volumes, etc. Wine in can, has also been in some urban centers. It's picked up. It's picking up, etc. Now, directly, I do not know what is going to be the response of seltzers, but a lot of thought process and mind share is going on because somewhere there's a lot of hope out there. What really, is somebody able to make a niche out of it? If he does, then probably if it's a local company or a local guy, he'll become a very valuable target for a lot of people. So.
Any more questions?
In terms of the no low thing, yeah, if the brewers and other companies are serious about achieving 10-20% of their volume coming from no and low, globally they can't achieve that without some success in markets such as India. It's impossible. As I referenced in the presentation I gave earlier, price is going to be the issue, the price points, because why are you going to pay over the odds for something that's effectively a Coke with maybe a bit less sugar, so a Diet Coke? It depends who's actually launching the product to the market, depends on the regulatory environment, whether they treat it as an alcoholic product, even though it's got no alcohol. All these things are factors. Wine in a can, yeah, I think that's got a chance, but there's a different shelf life, so that, it's easy putting it in a bottle, but putting it in a can, you've got different dynamics going on, different route to market. There's lots of complications. What was the other question was about? The first part of your question. Yeah. 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 Okay. Well, yeah, I mean, that's indicative of the fact that they feel they can't succeed globally in their ambitions unless they succeed here. And seltzers, that slowed down in the US quite substantially. But what we said earlier was that, the new cohorts, the LDAs, are drinking different drinks and they're being much more experimental. There's a wider number of drinks that they're drinking, which effectively means that more products are going to succeed, but to a lesser degree. Yeah, you can have more smaller brands.
Thank you. No more
Sanjay,
questions.
sorry,
Yes. Oh, you
last,
got-
last
okay.
question.
Yeah.
Sanjay, you work with a lot of Alcobev industries, I think 5 or 6. What is the situation in ABD now? Any idea? Straight question.
So it's a private
Last,
conversation we can have. It's not
last
good to
question.
talk in a forum about it. But it's a formidable player. I mean, let's you know, they do bring sizable volumes. I'll talk positive things, and I think they're still in the expansion mode. I know that they're entering new states also. Um, so that's what I like to say. But I think.
I think you don't want to
Yeah.
say
Beyond
much.
that, I think the
Okay, okay.
IPO is something that which is known reality. Thank you. No, I appreciate that.
Yeah. Thank you. Thank you, panelists. A big round of applause for the panelists.